Good afternoon, traders. It's Mark from the day trading room here. It's 35 minutes past 6 London time on Tuesday, the 17th of August. The Dow cash is up 174 at the moment and it's just motoring along. But I thought I'd do a slightly different video today to discuss the topic of drawing lines of support and resistance on your chart. It seems that a lot of traders are struggling with knowing which lines to draw on the chart, which to ignore, etc., etc. And I can fully understand why, because you can draw a line, you can draw hundreds of lines on your chart, and they're all relevant and relative to one time frame or another. But the key really is in deciding as which levels are significant to you and which levels you want to do business at is to filter out all the useless ones and to try and be left with a few that are going to help you frame your trade, either help you select your entry or select your exit. Now for me there are three levels which have to be on every single chart. And they're obvious ones, but you should have them on nevertheless. Yesterday's close. Now, obviously, when the market is analysed or it's quoted as being up 100 or down 50, that's relevant to relative to yesterday's close. So you've got to have yesterday's close on because that's the marker that everyone uses to determine the day's strength or weakness. Yesterday's high and yesterday's low, again crucial to see where the market is trading relative to those, and that's the peak point. If you sort of dissect down what yesterday's high and low is, that's the point where the supply and demand balance shifted. So it's a useful bit of information. You know that yesterday, at that point, yesterday's high, for example, at that point, the buyers then couldn't push it any higher. They didn't perceive value any higher. At that point, sellers perceived that it was a better opportunity than buyers did. So the supply demand balance shifted and we started to push down, and vice versa for the low. So you've got to have those three levels on your chart. Then after that, it becomes a bit more of a personal preference. So I'll just tell you what I like to use and how I like to use them. I always put the overnight high and overnight low levels on my chart, and I have those in a dotted yellow. Obviously color code those how you wish, but they just give me an idea of how we're trading today relative to overnight. If the overnight range has been large, if the overnight range has been small, if the overnight levels, highs or lows, have coincided with any significant levels from yesterday. So I draw those on my chart. And what I do also with the overnight trade, which I'm doing at the moment, which is on and off for me. I use it whether it's working on, or sometimes if it's not working, I'll start not to do it. But at the moment it's working quite well. I'll put two levels. I'll pick two levels in the overnight trade that were of interest. So levels that the market got stuck at, levels it struggled at. So levels of support and resistance just from the overnight session, and I'll put them in as a purple dotted line on my chart. As I say, it's not something I do all the time, but it's something that's working at the moment in this summer trade where a lot of the action is happening overnight and we're getting these gaps. So that's another thing I'll do. So those are levels I put on with dotted lines. Now, other levels I'll draw on are levels of interest from a 10-minute chart and a 5-minute chart. Now, I'm a short-term trader. I do look at the daily chart. I do look and I do see where we are, and I've got it on a tab here so I can glance and I can say, okay, there's the daily chart. Where are we in relation to the recent events? Where's the swing high? Where's the swing low? So I've got an approximate picture, whether we're near the lows, whether we're near the highs, whether we're near the midpoint. But I don't necessarily use that as a guide for my levels unless it's a level that's had a lot of significance. The reason I don't use the daily so much is that we can overshoot. You can have a temporarily strong or weak day that can overshoot a good level on the daily for several hours before coming back and forming a tail, which will just be a tail on the daily, but it would be a significant move on the 1 minute chart. So that's why I don't use those so much to mark on my trading chart. I prefer to use a 10 minute or 15 or 60. It's up to you. It's entirely up to you. Obviously, the bigger the time frame, the more information you're going to get, but you're not going to get as much detailed information. So, for example, here's a 60. of a cash. I've just drawn in I've got the uptrend line here, so I can see that we've been in a 60-minute uptrend and we've broken it, and now I can see we've been in a bear flag and then we've popped lower, then pushed back up. I can see relative to where we are for a longer period, but again, the levels, I find they're a little bit large and a little bit less significant. I prefer the longest time frame I like to use for looking at my levels is a 10-minute. So if I bring in a 10-minute chart here now for you to see, just as an example, I'm not saying to use these levels. I can start picking off levels. You can start to look at 5 days worth of action. You can say, okay, we've got a significant resistance there, significant support here, a little bit of resistance, a little bit of support, a little bit of resistance. So you can start to frame your trade. So while we're in this range the last few days, it helped greatly because we could see that when we broke out and we got to push back in, that was the obvious target. And then when today we've pushed back out, we've paused at the top level of this range before the decision has been made, and in this case it was buyers, and because we've broken so far out of the range, there are a lot of guys with stops getting pinged. So I have those levels marked on my 10-minute on my other screen. Now then I drill down to a 5-minute. A 5-minute for me is the number one chart for looking at your levels. You can get a lot more information. As you can see here, I've got a futures chart here, the YM, and you can see I've marked on these levels, and look how useful it is. These are levels that the market has paused at, found support at here, this 10,400, and then popped through around here. So, and I can now see obviously that this gap, if we start pushing up here, then this gap is an area to look. So I will then pick out 2 or 3 of those and draw those on my 1-minute chart. I'll also, on a 1-minute, I'll look at yesterday's trade. I will then mark on my 1-minute what has been of interest yesterday, and you can see here we've got this level round here, we've got this level here which is the 10,294, which has struggled at, and then this 10,324 is a level I've put in during today's trade. So I've done 3 levels from yesterday. If I can zoom in a bit more for you to see, which I've carried over for today. The support here at the 10,255, the 10,275, which was a sort of midpoint and a bit of interest, and the top of the range, the 10,295, did pop through once at about the half 5 level, but it couldn't sustain it. So for me, they were levels that I wanted to have on my chart. Okay, today was a little bit different because we gapped right out and they were of no use, but considering that if we had have dropped back into the range, then there would have been levels of interest. So I mean, that's the way that I draw levels on my chart. I look at levels yesterday because obviously the more recent the market has adhered to the levels and have been of interest, and I think they're more of interest to me. I'll be aware of where we are in the 15-minute, the 10-minute, and the daily, but I won't necessarily use those. I may use them as targets. Today's quite a good example of how we've broken out of the 5-minute, 3 or 4 day action, and we've started to push into new territory, and that's where your 10-minute or your 60-minute becomes more useful, because you can see then new levels, new targets, new levels to initiate trades, new levels to exit trades, and even if you're sitting out and you're not being involved, it's going to help you to see whether the targets were reached or they weren't quite reached, and to judge the market strength or weakness accordingly. Okay, so I hope that's helped some of you. Just wanted to mention about the site that we've got. It's a free site for traders. We started up to try and help support traders and educate traders. It's www.thedaytradingroom.com or .co.uk. I post on there some articles and I put on my YouTube videos on there. We've also got a forum there where we've got some guys talking about the psychology of the market. Some news gets posted on there. We've got traders tools and all sorts of great stuff. So it's a good place to go and ask questions. I'm on there. My trading buddy Chris is on there. He posts a lot. We post a lot. There's some other great traders on there. If you're struggling with your trading or you just need a bit of help getting back to that level of profitability, go and check it out. thedaytradingroom.com. Have a post on there. Ask a few questions. Have a look around. Hopefully it'll be of some help to you guys.